Hello everyone, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 21st, 2011. Now our first position for tonight is going to be in the July copper futures. Now what we're going to be doing is looking at shorting this. I think that copper is likely to continue its move lower after a minor retracement. We've closed at 407.35. From here, what we can do is identify our key levels of resistance using the Vantage Point software: 408.73, 409.45, and 409.89. Now, looking at our predicted short, medium, and long-term difference from Vantage Point, we can see that they're all below the zero line. The short-term predicted difference is a leading indicator breaking lower. Now our predicted MACD and our predicted TSI also getting ready to break the trigger to the downside. So all of this is warning that after probably a minor retracement, copper is going to move lower. Now looking at this is again somewhat of a higher risk trade with the metals, because metals are again highly correlated to the dollar. So we want to be a little cautious here, but this trade continues to do well, so we'll continue with that. Now, looking at the individual crossovers from Vantage Point, very important. You can see the short-term crossover. Again, here we're going to bring this up so everyone can see it. Short-term crossover, just crossing that again to the downside. The medium-term crossover remaining flat underneath the trigger. It has never crossed to the upside. And then our long-term crossover, you can see same thing. It's riding just below that trigger and continuing to push lower. So looking at this analysis from here, we can decide that we do want to sell into strength. So what we're going to do here, what we're going to do now is bring up the Vantage Point daily report and identify key levels using the predicted high and predicted low, the neural index. We're going to bring all this into play. So we can see the neural index here for tomorrow is down. We've got a 0. 412.21 is the predicted high. 402.15 is the predicted low. Our predicted short, medium, and long-term differences again are gaining strength in the short and the medium term. The long term somewhat, but not as predominant. So for tomorrow, 114.21 is the area we're looking for the market to move back to. When it gets to that level, we're going to be looking at selling. Now, to illustrate again how accurate the Vantage Point predicted high and predicted low is, you can see the red line is the Vantage Point predicted high, the black line the Vantage Point predicted low. Now we've actually had a high-low break to the downside here on copper contracts. So looking at that tells us we're looking for a minor retracement and then a break. Potentially for tomorrow, we could break below that 402 level. I think it's entirely possible. So that's our first position for tonight. Now our second position for tonight is going to be in the Canadian Japan currency pair. Now this is a highly volatile cross pair. Now what we're seeing is a little bit of a corrective move today in crude oil and the equity markets. I think this is going to continue tomorrow ahead of the FOMC. So likely what we're going to see is some Canadian dollar strength and further yen weakness, providing those equities can rally. So this one here is largely going to be based solely on the Vantage Point predicted high and low and the fact that we are grossly oversold here. And this thing is basically, much like dollar yen, is running flat. Now the one thing that I find of interest here is the predicted MACD and the predicted true strength indicator have actually crossed the trigger to the upside. You have to look very close to see it, but they have done that. Our predicted short, medium, and long-term differences are running flat. Now looking at our crossovers from Vantage Point, our short term is to the downside, but our medium term is completely flat. It has a neutral bias, and the long-term crossover, it has somewhat of a downward bias, but again, very limited. We can see a considerable amount of support. If I draw this in here, you can see at this 81 level we have a considerable amount of support sitting down at this area. Now again, using the Vantage Point predicted high low and putting it right on the charts here, we can see that today we're tagging the low, but we're starting to flatten out. So for tomorrow, I think we've got a good possibility of moving higher, providing crude oil and equities cooperate. Now from there we can go into our daily report from Vantage Point. Now using the daily report, again, this is strictly an intraday trade. What we look at here, we can see our close today was higher than Friday. That's a positive sign here. So what we're going to do is we're going to use the Vantage Point predicted high and predicted low to get into a long position. 81.42 is the predicted low from vantage point. The predicted high, 82.56. That's our target area for our entry and for our exit. We can see after 2 down days, the neural index has just turned to the upside. Those are the kind of signals for an intraday trader should be looking for, because it's a very good one, and it tells us that we've had a couple of down days, the neural index is turning to 1. If nothing else, we should see a little bit of upward momentum for tomorrow's trade. So I like this trade. I think we can pick up, you know, somewhere between 60 and 100 pips on this particular trade if we're patient. So we have to let this thing pull back. We've closed, again, you can see we've closed at 81.93, so we're looking for the Canadian dollar to initially give up a little bit of strength and then fall back down. When it hits this 81.42, we're going to enter our buy positions. Now, stop on this trade, I would put it at about the 80.75 level to make sure we again stay out of that broker radar and give the trade a little bit of opportunity to progress. So with that said, those are the market positions for June the 21st, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.